Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, November 17th, 2021. Starting with markets, we got stocks mixed this morning, commodities down, crypto flat, dollar up, global bond yields flat to down. Big movers, we have copper and WTI down 1%, nat gas down 2%. Energy weakness coming on news that the U.S. and China may do a coordinated strategic petroleum reserve release. We'll see on that. On the economic front, yesterday's U.S. October hard data represented the best confirming evidence of our post-Delta bounce view. So we had retail sales on a headline basis accelerate to 22% on a seasonally adjusted annualized rate of change. That's the highest we've seen since March. The control group accelerated to 21% on a SAR basis. That's the highest we've seen in a couple months. Industrial production accelerated to 21% SAR. That's the highest SAR we've seen since March of 21. And then capacity utilization, that accelerated 120 basis points to 76.4%. That's the highest level we've seen since December of 2019, and that's the fastest rate of change we've seen since March. So obviously the economy picking up a little steam here heading into the fourth quarter. But with COVID infections skyrocketing in Europe again and our slope starting to tick up, investors must ponder how long can any such post-Delta bounce in global economic activity persist into the winter months in the northern hemisphere. On today's probable range setups, overbought signals, you got that in currency volatility, dollar versus Canadian loonie and dollar versus the Swiss franc. Nothing oversold this morning. With respect to the S&P 500, minus 1.6% downside versus 1.4% upside. WTI 3.9% downside versus 8.9% upside. Bloomberg Dollar Index 1.5% downside versus 0.4% upside. Taking it to the chart here, so one of the things we look at on a daily basis is the relationship between skew on the x-axis and the volatility risk premium on the y-axis. And we're typically trying to fade these metrics when they get to extremes. Obviously, you want to fade pervasively bearish skew. You want to fade pervasively bearish implied volatility premium. That's what these boxes indicate. So you want to check that out, come check us out. But the reality is, with respect to the dollar, the market is actually starting to get incrementally bearish on the dollar, despite the dollar having broken to bullish from the perspective of our volatility adjusted momentum signal a couple of months ago. So this is something we're calling out. We think the dollar move has legs into and through the middle of next year at the earliest. And so that's something you want to keep in mind as it relates to any exposures that you might have that are inversely correlated to that. Getting back to the probable range setups, 10-year treasury yield minus 15 basis points of downside versus 13 basis points of upside. Bitcoin 0% downside versus 19% upside. Ethereum 0% downside versus 24% upside, and then gold minus 3.2% downside versus 1.7% upside. So with that, Darius Dale presenting our macro minute for Wednesday, November 17th, 2021. Best of luck out there.